So good morning, everybody. I'm Martyne Pearson. I'm a VAT director based here in London. So what I'm going to do this morning for the next 5 to 10 minutes is just to walk you through some of the VAT changes that we're seeing that have come into place and some that are going to come in the near future at a very high level. So I'm going to start with the VAT penalty and interest regime that was supposed to come in with effect from the 1st of April this year, but it's been delayed until 2023. So this really is looking at replacing the default surcharge regime that sits in place at the moment. So if you file your VAT return late, or if you make payment late at the moment in respect to VAT returns being submitted, we have a sliding scale of penalties. Normally, first of all, you'd receive a letter saying you've been very naughty, you've not done what you're supposed to do. Please ensure that you file on time next time. And then we've got a sliding scale of 2 to 15% of VAT loss, effectively, that's not been paid on time. So coming in as effect from next year, we've got a new system. So we've got a points system. So obviously points make prizes for HMRC. So it's a bit different. So slightly different regime for late submissions versus late payments. So for late submissions, basically it will be points driven. So if you submit your VAT returns on a quarterly basis, for example, you're allowed to accrue 4 points, so 1 point per late submission throughout the year. Once you've reached your 4 points, you'll get a £200 fixed penalty. If you were then to fail to submit your VAT return, next time you get another £200. So it's very much a fixed penalty regime for late submission. On the late payment side, still going to be tax geared, but it's going to be a little bit more stricter than what it was before. So instead of having a sliding scale from 2 to 15% over a period of time, effectively what we're going to have is that for every late payment, if you pay your VAT due within the first 15 days after due date, then you'll only get 2% penalty, only 2% penalty of tax loss of VAT that should have been paid on time within that earlier period. If you don't pay within the 30 days, it's going to go straight up to 4%. So in some ways, they're looking to really encourage you to make payment on time. What they are saying, though, is if you call HMRC or if you look to agree a time to pay arrangement in advance of those deadlines, then they will waive all penalties. So it's kind of coming along the lines of, obviously, with making tax digital now, the VAT process should be automated. You should therefore be able to file your VAT returns on time and therefore make payment, but really trying to encourage the taxpayer to talk to HMRC prior to the penalties kicking in advance. Interesting that they say that, because I don't know whether you have much dealings with HMRC, but we're really struggling at the moment to get proper time with HMRC to talk about taxpayers' issues. I think, Jackie, you mentioned that they're looking to cut back a lot of staff, and we're already seeing the impact of that effect of client service. So yeah, the quote at the bottom saying that they're not going to implement it this year, they're going to wait till 2023. They've got IT issues, but they really want to ensure a high standard of customer service. So it's a bit ironic in some ways that they're saying this, because I think going forward it's going to be, if they're going to cut back the number of staff that they've got helping on these things, sometimes it might be a little bit more difficult. But time to pay, talking to HMRC about time to pay will become even more important, because the penalties are likely to be higher than you would have had before per VAT return. Right, next slide, please. So yeah, lots and lots of activity. Don't worry, I'm not going to go through all of these because you could be here all morning with me, but I'm going to go through a couple of them. So this is kind of, when HMRC issue a business brief, it's often to clarify law. It's often to put out in the public domain any changes that they think are relevant to businesses. Business briefs are not really, don't really hold the force of law, but they are tertiary legislation. So if you ever have looked at HMRC's public notices or business briefs, anything in a little box tends to carry the force of law. The rest of it is HMRC's interpretation of what they believe the position should be. So let's go on to the next slide, please. Okay. So we probably talked about this last year when I think it was probably one of the topics that I covered in the last hospital update 12 months ago. And it was really in respect of the change to HMRC's position on termination payments, compensation, cancellation, and retained deposits. And in September, there was a revised set of guidance issued by HMRC, but we're seeing more and more actually in respect of HMRC looking to tax things that previously weren't considered to be taxable. It's quite interesting because the first set of compensation rules really came out around about the time of Brexit, so shortly after we left the EU. And it was a very interesting indication that actually, whilst previously we were bound by the European legislation, and the UK VAT law is set within the guidance of the European legislation, HMRC are almost going forward on a cherry-picking position, taking their own view, taking to look to tax things that may not have been taxed before under that European law. So we are seeing lots of conversations whereby HMRC are looking at things like termination payments to close leases, for example, on hotels, or terminating contracts early and taking a view really that it's additional compensation for, say, the rental payments that were due or any amounts that were due under the lease. So quite a change in respect of the way in which HMRC are looking to tax the industry rather than helping and supporting. I think this time last year it was very much we've got the COVID support, we've got the reduced rate hospitality, and I think now they're looking to claw back some money and looking to take a different position on some of the charges that were previously not subject to tax. So quite an interesting point in respect of any contracts that you may have entered into that you're paying to get out of. It's worth checking to make sure that double check to make sure that you're taking the right position on the VAT side. Next slide, please. Okay. So this again is another interesting piece, and it comes back to HMRC being very under-resourced at the moment. So I don't know whether anybody in the room has applied to be VAT groups, applied to join members into a VAT group, trying to get out of a VAT group, but we've seen quite significant delays with regard to HMRC responding. Normally, when you submit a VAT group, HMRC have got 90 days to respond and confirm whether you should stay in the VAT group if they've got any issues with you joining the VAT group. But we've got some cases where we've not had a response for over 6 months due to delays internally with HMRC because they don't have enough resource to support. So with VAT grouping, it's quite interesting because HMRC did issue some guidance around November 2021, which basically said if you filed a group registration, what you should do is, if you've got single VAT registrations that are separately VAT registered already, and then looking to join into a new VAT group, for example, what you should do at that stage is continue to submit your VAT returns to make sure that you don't miss the payments, you don't miss the filing deadlines, and therefore you don't get any penalties. So we've had a number of our clients file for a new VAT group, submit their VAT returns as they go. Very interestingly, HMRC have sent revised guidance out, which basically says you must treat yourself as if you were in the VAT group from the date you applied to be in the VAT group. So almost gone full circle in respect of what they said previously. We've also seen a position, so they're saying treat yourself as if you're in the VAT group, even though you don't have your new VAT number, and do not file those VAT returns for the single registration. So lots of concern around, okay, if I don't file my VAT return, am I going to fall into the default surcharge regime? What's going to happen? HMRC have said, don't worry, you'll be issued with penalties, but we'll cancel them as soon as the VAT group number comes through. So quite an interesting position for HMRC to take, and we're hoping the delays are not going to take us much further. We've got, this is particularly a problem if you've ever been involved in a transaction. So James mentioned transactions earlier. We've seen a huge amount of transactions across the board in the last 6 to 12 months, where we might set up a new company like a BDO to acquire a trading company, and then for VAT recovery purposes, typically, because if you've got a lot of VAT on transaction costs, you tend to put the BDO into a VAT group or apply for BDO to be in a VAT group with the trading company, so it can make management charges going forward, secure the VAT, all lovely. So where we've been seeing some issues coming up due to the delays in the VAT grouping is the fact that the change in the guidance it's not been helpful, because we've had a couple of situations whereby the trading companies, per the old guidance, have continued to submit their VAT returns. And then we've obviously got that forms in saying we want to be VAT registered with effect on a certain date during the time in which we're still submitting VAT returns. And now HMRC is saying, well, sorry, we can't give you the effective date of registration over here because you filed VAT returns. So it's causing quite a few problems. So if you submitted any forms, it's worth looking at the guidance, because it may be the case that you might get penalty letters through the post if you've chosen to go with the new guidance and not submitted your VAT returns. Or there might be some issues with, if you've been involved in a transaction where you've got a bid code that they're saying you can't register this bid code from this set date. And that will cause a problem if you've got pre-registration input tax that you want to recover for the bid code as part of the transaction, because you can only go back 6 months on services. So HMRC is saying, well, you should VAT register that legal entity by itself until the effective date of the registration for the group. That's okay if you're going to make management charges, or if you have made management charges, but not so good if you've got loans within the 2 legal entities that allow you to have VAT recovery, because you have no right to register the single legal entity of the bid code. So quite complex. All I'm saying is, if you've done it, it's worth thinking about whether the old rules, new rules are going to push problems in respect of your compliance at the moment. Next slide, please. So this is a very interesting case. It comes back to transaction costs. So typically, if you've got a situation where you've got a UK company selling shares in a UK company to a UK recipient, the issue of those shares tends to be exempt for VAT purposes, so you get no VAT recovery whatsoever. This case is very interesting because it challenges that position. And actually, in Hotel Le Tour, it was exactly what I'm saying. So they looked to sell one of the subsidiaries, the UK subsidiary, to a third party. And normally that transaction would be exempt, and it was exempt because the issue of shares to a UK recipient is exempt for VAT purposes. But actually, what the taxpayer was able to argue in this case was that the reason why they sold the UK shares was to fund downstream taxable activity. So when you look at VAT recovery, you normally have to look at, is there a direct immediate link between the supplies being made and the costs being incurred? And as I say, typically in a sell side situation, it's very difficult to argue that position because you've got an exempt sale of shares. This case is very useful if you've been involved in any of those transactions, but only if you can prove that there's a wider purpose to selling that business. So in Hotel Le Tour, they were able to evidence that they had records on file that the reason why they were selling the shares of the UK business was to fund a new acquisition, to fund a new taxable activity, and HMRC actually agreed that all of that could be reclaimed. So it does open the door to look back 4 years. So with VAT recovery, you can go back 4 years, and you can look to see whether you've incurred any VAT on any sell side costs that you haven't recovered previously. But you have to have evidence to prove that there was a wider purpose behind the sale of the UK shares, and have some evidence to show HMRC that that's the case. So quite interesting, because we haven't had a case like this for a very long time, whereby it gives us that extra opportunity to look back and look to see whether you can claim VAT that was previously blocked. Right, next slide, please. So this is my last slide, actually, and it's just say every year we do a get ready for 2022, and we look forward to we make sure that it's very clear as to what's coming down the line for our clients. So obviously we've seen the temporary reduced rate go back up to 20%. We've seen an introduction of plastic packaging tax, so a new tax regime that looks to tax manufacturers or importers of plastic. So a real aim for an environmental reason to look at recycled plastic rather than new plastic. I don't think it will really affect many people in the room or on the call, but it might have an impact in respect of pricing, in respect of any products that you're buying in. You might see a hyper increase in respect of your costs. Talked about the new regime for late penalties and late submissions. Now that's coming in at the end of next year. We've seen a mandatory making tax digital for all taxpayers that didn't fall into the regime previously. So everybody should fall into that regime now. If you're not, you need to have a look at that. And then we've seen a wider view in respect to HMRC introducing a new requirement to notify HMRC on uncertain tax treatment. So that's not just a VAT notification, it sits across most other taxes. So if you haven't looked at those rules, it's definitely worth you having a look at them. And it's to really encourage you to talk to HMRC, disclose items to HMRC that you may not have previously spoken to them about, in order to make sure that your tax position is clear going forward. So I think that's it for that for now.